Hello guys, my name is Muhammad M Faridl and today I'm gonna discuss about the homework problems 10.4, discussing the dispositions of each transaction mentioned in the book, and the transactions made are consisting of land, building, warehouse, machine, furniture, and automobile. And first of all, the instruction asks you to indicate how these items would be reported on the income statement of the company. And for land, it asks you, it states the transaction on February 15, a condemnation was received as a consideration for unimproved land held primarily as an investment, and on March 31st, a land to be held as an investment was purchased at a cost of 35,000. So in this case, the land purchase is recorded into the balance sheet account, not income statement. Whereas the transaction that is recorded into the income statement is the loss of condemnation, which I get from subtracting the cost by cash proceeds, and I get 9,000. And it goes to an other income and expense account. The second one is building. The transaction is on April 2nd, land and building were purchased at a total cost of 75,000, of which 20% was allocated to the building on the corporate books. The real estate was acquired with the intention of demolishing the building, and this was accomplished during the month of November. Cash proceeds received in November represent the net proceeds from demolition of the building. So the building is being purchased at a rate of 20% of a total cost of 75% separated with the land. So that means 75,000 divided times 20%, that gets me to 15,000. And it says the demolition cost would be 3,600. So the I deduct building and demolition, then I get land. So the so the so since there is no gain or loss is recognized within this transaction, that means that the when I subtract building and demolition, it goes to land account instead of um, income statement. Okay, next one would be a transaction about warehouse. So on June the 30th, the warehouse was destroyed by fire. The warehouse was purchased January 2nd, 2007, and had depreciated $16,000. On December 27th, the insurance proceeds and other funds were used to purchase a replacement warehouse at a cost of 90,000. So in this case, it's an involuntary conversion, which means that the warehouse was accidentally burned on fire, and then insurance covered it up. So the insurance proceed is 74,000, and the cost of the warehouse is 70,000, less accumulated depreciation of this, that gets us this the when I subtract 70 and 16,000, that gets us to book value. And in order to get the gain on the disposal, you subtract 74,000 by 54,000, and it gets us to 20,000. And this goes to other income and expense account. The next transaction is the exchange of machinery. So on December 26th, the machine was exchanged for another machine having a fair value of $6,300, and cash of $900 was received. So it stated here the exchange lacks of commercial substance, which means that any particular gain is not recognized within income statement or other account. So The fair value of the old machine 7,200 minus the book value, which is I subtract 8,000 by 2,800, and that gets us to 2,000, and that is the gain deferred. Well, like I said before, that the gain deferred shouldn't be recognized because the transaction has no commercial substance. And then uh, because the company get new machine and the new machine fair value is 6,300, then we have to subtract the new machine fair value of 6,300 by the gain deferred, which we get earlier 2,000, and in order to get the cost of the new machine to capitalize it. So the answer is 4,300. Next one would be the transaction regarding the furniture. Um, so, so the transaction says on August 15th, furniture was contributed to a qualified charitable organization. No other contributions were made or pledged during the year. So I put that one as abandonment because I think getting away your furniture uh, without and leaving it behind is an act of condemnation. So here, the furniture contribution of 2,100, I record that one as an expense account, which is contribution expense. And for the gain or loss of the disposal, uh, I count. I put fair value of furniture to 3,100, and I subtracted by the book value, which is 10,000 minus 7,850, and the book value of furniture is 2,150, and the deduction of the fair value and the book value, as we know, is the gain or loss of the disposal, which in this case is a gain, and that this amount of 950 goes into other income and expense account within the income statement. The last one, which we would be automobile, and the transaction clearly states on November 3rd, the automobile was sold to Jared Winger, a shareholder. So uh, it gives us the fair value of the automobile is 2,960, and the book value is the addition of cost and accumulate is the subtraction of the cost and accumulated depreciation. In this case, is 9,000 minus 3,460, which is 5,540. And then I subtract this fair value by the book value, and I got a loss on sale of 2,580. And this amount goes into other income and expense. Thank you for paying attention.